the stock market morning prep video for Friday, October 24th. Index is in the green. Dow Jones up 216, Nasdaq up 69, S&P up 23, and Russell up 19. Most of the gains were right on the opening, and we pretty much went sideways. A little bit of selling coming in at the end of the day, but a very quiet day. Bounce that we have right now is still not to be trusted is really what the word I want to use, and I want to show this to you. And when we get a retracement rally off of a pretty decent sell-off we had a few weeks back, you want to see what's leading, right? What's really holding up. So in front of you, I have a histogram chart of the S&P, technology, materials, industrial, cyclicals, energy, and of course consumer staples, healthcare, and utilities. So if you look to the right side of your chart, what do you see? Well, you have the three safe haven sectors where money is flowing into, and then if you look at to your left, where the riskier, so to speak, assets would be flowing into if the market participants, investors, feel real comfortable with the market. And you can see this is clearly not showing you that. We have money flowing into staples, healthcare, and of course utilities. So that's not a real good sign. Now, can the markets continue to go higher? Yeah, absolutely. We all know this. But we have retraced 61 to 78.6% of this move. In most cases, the indexes were at their 78.6% retracement. So this is really a do or die. This is really the sweet spot for the market. If the market's going to continue to rally, it's going to break back above these current levels of resistance and then start to continue to move higher. Now, remember, market sold off real hard, and now we bounced real hard, but the bounce is on very light volume. A little bit better volume the last couple of days, but really nothing to write home about. So keep an eye on certain things we're going to show you in a moment, but more importantly, get a good perspective. You could do this on any charting package, stockcharts.com. You could do this for free, and it really gives you a good idea of where the money's going, and the money is clearly not going into any risk-on assets. You can see this clearly here. So this is a sort of a troubling sign here. Energy has gotten destroyed and now trying to stabilize a little bit, which that would help the market. But you could see this here. So as we all know, October is definitely a month where we see extra volatility and where we put a tradable bottom in place. So let's see if that's going to be the case next week. It'll be interesting to see where the market goes from here because the markets are in trouble. They're not as healthy as we had the end of 2012, beginning of 2013, where the market literally just went straight up. Now we have a little bit more volatility. That does not mean that we're not going to get a Santa Claus rally. That's still early to be seen yet. So today, which is Friday, and then of course next week, it'll be interesting to see where this market is headed. Okay, so let's go take a look at the indexes here. All right, E-mini S&P daily chart. You can see coming down from this nasty sell-off, we're back above the 61.8% retracement, but we're still below the 78.6. And right now, to me, this is showing me making a lower high from this previous high. RSI still, not really overboard, but getting there, so we could get a little bit more movement today into this area. But we are in that sweet spot where we mentioned the other day about that 1940, 1950-ish area. So let's see if the market does decide to move over. Now look what's happening here. See, we had this sell-off, right? We had that one-day decent volume, and then look at this. We just continue to move lower and lower on volume. That's not a good sign for a retracement rally. Here's the 4-hour chart. Again, back into this sweet spot here. Okay, let's see if the markets are vulnerable at these levels. Here's the diamonds, the Dow. Again, we almost tagged the 61.8% by literally a couple of points. So we're there now. Nice topping tail. Low volume. I mean, this is a recipe to start shorting the market. I wouldn't short the market yet. We had to take out the previous day low. That's going to be really the target on all of these indexes. And you might want to write that down. Transports. Big mover. We had a nice big move here on UPS News. Again, this is the only index that if you were a bull, has a lot of hope. You're back into this channel, as you can see. Big long channel. And now we take the 78.6% retracement off from this high to the low here. So we are ready, and we can move lower. But again, you got a lot of support here. You can see the moving average starting to cross back to the upside. We also have this lower trend line support, so it has a lot of work to do. And this little gap area of support, I think it's going to need to really break that gap area. And that's going to be that 148.33. Call it 148. If we really start to break down below that, then I can really see us testing these lows, at least get to the 200 day. And then let's take a look at the Russell. And what can you say? Russell's been the problem child for the last year. Again, making a lower high from this previous high underneath the 200, and we have these moving average areas not even ready to cross over. A little bit better volume, but keep an eye on it, because this is, well, you know, if you look at it, to me, it looks just like one big bear flag here. You can see that. Here's the flagpole, and here's the flag. So, you know, this is not really a convincing chart to me that tells me that, you know, that we're looking to, that we're looking to move higher, at least on the Russell. And you know, beautiful, perfect bear flag here. Here's your flagpole, and that's the pattern. So it doesn't look so enticing that that at least the Russell wants to move higher. All right, so we're still below it, and if we start to break down, that's really the index I'm going to and have been keeping an eye on. That's the Russell. All right, let's take a look at the Qs. Q's much better, and they've been holding up relatively well throughout the year. Technology's been doing pretty decent, but lower than expected volume. We had, you know, look at this, you know, one gap up, gap up, gap up. So very hard to kind of day trade if you're trading the indexes when you have most of the gains that are happening at the opening, and then we go sideways. So, but there are some decent ideas out there. All right, so keep an eye on the Qs, 78.6 retracement. We tagged that just literally within a couple of points as well. So we're at the sweet spot now. Again, 78.6, 61.8% retracement. I would not like to see it get that far. Really, I would have liked to see the 61.8% hold, but it is what it is. We're right at these areas now, and let's see if we can really get some selling pressure. The Ebola is starting to subside. You know, we haven't heard really anything out of the Russia-Ukraine issue and Israel, that conflict, and ISIS. Yeah, it's still ongoing, but you know, we haven't really heard too much about that. So maybe that starts to pick up in the news. But remember, this market right now is totally news-driven on Ebola, on conflicts, what's going on in Eastern Europe. So we got to be careful, and I would not be looking to be holding any positions, and I sure wouldn't be adding positions to these levels here. If you are a longer-term investor, okay? So I would keep the book tight, and let's see where we go in the next couple of days. If the markets can prove that we have a tradable bottom, and what I'm really hoping for and looking for is the next pullback. See, the next pullback, if we take out the previous day low and we make a higher low, let's just say for argument's sake, we get back down to this area and make a higher low from this low, and then we start to move higher and take this little high out here. Then I think the market's got a lot of legs to move higher. At least take that 1272 extension back up where we put about a month back. So that's really the game plan. Keeping it really light right now. The markets can go either way at any given time. Really don't know. I just don't like the retracement rally on this volume. That's concerning to me. The Russell's also concerning me, and money flow going into consumer staples, healthcare, and utilities. That's very concerning. And of course, bonds. Bonds continue to move higher. So you know, that's all a recipe of lower prices in equities. But with the Fed inducing money into putting liquidity into the markets, you know, you can't fight the Fed. So we want to just get a little bit more confirmation that we are already headed lower. But we are coming into the sweet spot of seasonal strength too as well. So a lot to digest. Let's keep an eye on price. Price is king, and price is going to tell us which way the market's headed. Have a great day. Enjoy the weekend, and we'll speak to you on Monday.